Just a quick chat here on equipment leasing and leasing generally of assets. So what does this mean? Basically what it means is instead of buying the asset, and you might get asset finance for that, so you go to an asset supplier and the asset finance company would pay the supplier and you would then owe the asset finance company. That's a capital purchase. Equipment leasing is where you would rent the equipment from the asset supplier. So it might be a car, it might be a piece of machinery, and the differences between leasing and buying are generally to do with tax and cash flow. So you need to talk to your accountant about this. The tax relief is sometimes advantageous on equipment leasing, and the cash flow is also sometimes advantageous, but you need to compare the figures, see which is more advantageous for you. The other thing to think about is what happens at the end of the lease, because in some leases you have to hand the equipment back, and in other leases you can buy it for what is known in the trade as a peppercorn rent, or continue to rent it for a peppercorn rent, or you can buy it outright. So it's quite complicated, but talk to an accountant, and if you need one of those, come to Funding Store, do a search on the advisor section, or give us a call on 01565 756 141.